Good morning. Thank you for inviting me. Madam Chairwoman Velasquez and Ranking Member Shabbat and other distinguished members of the committee, I'm here on behalf of the American Institute of CPAs. Our 300,000 members represent literally millions of small businesses, and at this time of the year especially, we see firsthand both the staggering complexity that you mentioned and the unnecessary complexities that you mentioned that face small businesses when trying to comply with the tax laws. We have submitted a number of important changes that we think could be made to modernize the tax code and help small businesses be more competitive, especially in a global marketplace. And I'd request that our previously submitted testimony be included in the official record of this hearing. Today, I'd like to focus on a few of those items that we believe could make the tax code simpler, as you suggested. Some of those have to do with S corporations. As you probably know, S corporations are a very popular vehicle for small business owners when it comes to forming their corporations. One significant hurdle that is faced by a C corporation which wants to convert to an S corporation is the LIFO recapture tax. This is a tax which is computed on the difference for inventories computed under the LIFO method of taxation and the FIFO method of taxation. We believe that that recapture tax is paid at the date that the corporation elects to be taxed as an S corporation. We believe that this tax could be more than sufficiently addressed through the built-in gains tax. And we believe that the repeal of this provision, Section 1363D of the Internal Revenue Code, would allow more small businesses, such as car dealerships, jewelry stores, and others, to participate in this popular form of doing business, the S corporation. A second corporate-level tax that's paid by S corporations is what's known as the passive investment income tax, or also more popularly known as the STING tax. This is paid by many corporations who have previously accumulated earnings as a C corporation, and when their gross receipts as an S corporation exceed more than 25%, or royalties, rents, and interest and dividends exceed more than 25% of their gross income. In addition, if this happens for 3 years in a row, the S corporation election is automatically terminated. We believe that the law should be changed to eliminate the termination provisions, and because we think that the penalty provision or the STING tax is enough, and that business owners shouldn't be penalized by having their S corporation status repealed. I'd like to spend a couple of minutes also focusing on partnerships. Many new businesses, small businesses, form partnerships, and partnerships or limited liability companies have become the preferred method for most new businesses that involve more than one person. Generally, Subchapter K of the Internal Revenue Code, which governs the taxation of partnerships and partners, can be extremely complex, and yet there are only a limited number of de minimis rules or other ways for small businesses that are required to report under partnership rules to simplify their lives by electing out of Subchapter K. One recent enactment created what is called the qualified joint venture, and this was based on a noble congressional desire to simplify the tax life of husbands and wives operating businesses together, and to make certain that both spouses receive credit for purposes of Social Security and Medicare. This election allows the two partnership participating spouses to forget about the complexities of Subchapter K and to file as separate sole proprietors. Unfortunately, a recent IRS interpretation of this new statute provides, if this interpretation is allowed to stand, it is very unclear as to which, if any, of these small businesses operating as husband and wives will be allowed to take advantage of this provision. That should be clarified. Wanted to spend, we agree, by the way, with Mr. Mackey with respect to the treating phone and personal PDAs as listed property, and we think that should be repealed. And finally, we would like Congress to change the rules which currently provide that a taxpayer can take a position without penalty on the Internal Revenue Code that a tax preparer could not take without disclosure or being subject to penalty. We think that makes the playing field unfair, and we would like to see that changed as well. Thank you very much.